What's up, YouTube? This is Thomas from Thomas Best and thank you for watching. Today I want to talk about Lowe, a company that made a lot of money during COVID because of all of the home renovations and building projects. In this video I will give my opinion about Lowe and I will show you my fundamental analysis. I will give you 3 stock price scenarios and I will show you what I think is justified. If you're new to the channel, make sure to subscribe to get notified when I'm posting a new video. I also appreciate an early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. As I said, Lowe made a lot of money during COVID. This may change the fundamentals of the company. So please be aware that some might give you a wrong image of the company. This is also something you have to decide for yourself. Do you think Lowe can grow in the future at the same level as last year? Personally, I don't think so, but let's find out. Starting off with the PE ratio. Lowe has a PE ratio of 20.3, so it's above 20 to be fair, and also a red X, but I don't bother that much because it's not far away from a checkmark. As we all know, profit margins are a bit lower in this sector. Lowe has a profit margin of 7%, also a red X, but I don't bother that much again, because they are in a sector where margins are lower, so no big deal to me. Revenue was up big time last year and also since 2016 the revenue is up. So of course this is a check. But please keep in mind that the years before last year did not grow that much. The question you have to ask yourself is, how can Lowe grow in revenue? New products, new stores, maybe some acquisitions? Do some research for yourself and check where the growth is. Since 2016 the profit is up, so it's a check. But same story as with the revenue. Please keep in mind that last year may give a wrong image of the growth story. The return on investments is very high, so this is very nice, but the return on assets is very low. This means a red X because it's below 10%. Lowe is buying back shares. This means a big check mark for me. I love to see big companies buying back shares. This also means you will own more of the company because there are less shares outstanding. With the current ratio, you want to check if the company is capable of paying the current liabilities with the current assets. You want this number sitting at 2 where 1.5 is the absolute minimum. Lowe has a current ratio of 1.17. This is below my minimum of 1.5, so it's a red X. But keep in mind that many competitors have a lower current ratio, so Lowe doesn't a terrible job here. They need to have a lot of inventory, so I don't bother that much. Free cash flow from 2016-2018 was going down. 2019 was a recovery year for Lowe and 2020 was of course the best year ever. But still a check mark. Free cash flow is used for paying dividends, buy back shares, do acquisitions and some other stuff. As always, we have 3 stock price scenarios right here. Low, mid and high, based on the growth we predict in the future. First, we take the 5-year average of the free cash flow and use a growth multiple to compare it to the actual market cap. I think Lowe will grow a lot this year again, because of all the people investing in their home or building projects. But after this year, I think Lowe will get back to slow growing company, as they were before. This means I think it's fair to assume a multiple between low and mid. This also means that Lowe is overvalued between a range of 23 to 42%. I think Lowe's fair stock price should be between $110 all the way to $150. So it's a red X. If you think Lowe is going to grow a whole lot more, then check the high multiple please. They are a little bit overvalued right now, but not by much. But this is something you have to decide for yourself. My conclusion is that Lowe is a wonderful company and also loved among dividend investors because of the steady dividend history. But from a value investing point, it has to be said that Lowe is a boring, slow-growing company, except during the COVID period. You have to be aware of this. I think when Lowe is at the fair value, I will buy them big time, because they have a big moat and also products that everybody needs some time in their life. So for now, I will skip them and add them to my watch list, because I like the business. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.